What is up, southeastern Wisconsin? Justin Hoffmann here, your host for the next few minutes for the M4 video. It is for the month of September as well as the third quarter. The Metro Milwaukee market minute is in. What's going on now that interest rates tripled in the last few months? What do you think is up? It's obvious. Sales are down. Duh. Common sense, folks. None of this that I'm going to tell you surprises me one bit. September. Let's start with the nasty. The nasty September. The Metro Milwaukee market is down 17%, folks. Milwaukee down 17.5%. Waukesha down 15%. Ozaki narrowly down, only 3%. But Washington County got mollywopped, down 27.6%. And our bonus month of Racine down 20%. Why? Why would sales go down? Well, maybe it's because the average person can't afford these current prices at the new interest rates, which are literally 3% higher than they were just a few months ago. So we have a home affordability issue, which is going to probably plague us while these rates stay high for the next few months until the feds figure it out. But right now, they've done a little bit too much too late. We should have been doing interest rate raising probably about 18 to 24 months ago when we started to get into COVID. And then the government shut down the entire world, so we have a supply chain debacle, which has caused inflation to levels that we've not seen before. And folks, this is not your mama's recession, and this is not your mama's interest rate or inflation scenario back in the 70s and 80s. This is completely different, and we're going to probably go through some turbulence here over the next months to figure it out. But what happened in the third quarter? Not as deadly and not as painful. Milwaukee was only down 7%. Waukesha County dropped 10.5%. Ozaki 15%. Washington County 5%. And Racine dropped about 8%. Overall, just under a 9% drop. Remember last September 21, we had record amounts of sales. So overall, when I look at this on a 4-year pendulum from 2016 to 2019, there were 16,000 units sold. We're right about that same exact area, up maybe 8.6% is what they're telling me. So it's not like we're in a real estate depression. We're just in what we call a real estate correction. It's a shift, but don't make any mistake about it. This is not a buyer's market, and it's not a seller's market anymore either. This is motioning into a neutral market, but what's really messed up is we usually don't have a neutral market until we have 6 months worth of inventory. Well, guess what, folks? We have 1 month, 30 days worth of inventory. Listen to why. September listings fell off a shelf. 23% down in Milwaukee County, 18% down in Waukesha, 35% down in Ozaki County, and 36% in Washington. Those are huge numbers. Racine, by the way, also down 26%. Overall, that 5-county area is down almost 24% in listings. Folks, if we don't have listings, we can't have buyers. If you don't have listings, you can't have a buyer's market, right? And if you have interest rates at 7 or 7.25, you can't really have a seller's market. So we have a really weird market. It doesn't know what it is. That's kind of funny, but I won't get into that. Third quarter listings, overall, down about 13.5%. So we're continuing to see inventory drop. Because interest rates went up, we're continuing to see buyer demand drop just from a home affordability factor. And all of that is coupling into what are we going to see in the next few months? But currently, prices are still on the rise because we still will always have supply and demand pushing prices up. Third quarter sales price increase in Milwaukee County, 6.5%, 9% in Waukesha County, almost 6% in Washington County. Ozaki showed a 9% increase. Ozaki coupled by Racine with an 8% increase. So we're seeing, on average, we're worth 8% more than we were last year in the third quarter. So values have gone up over the last year. No surprise there because it's supply and demand. But as this interest rate plays a role, as inflation plays a role, as the feds come out and make new monetary policy or give, ideas of what they're going to do with the interest rates, we're going to see the interest rates continue to go up. There's no question in my mind. Because of that, I think we will see a little bit of a lax in sale prices based on home affordability, not based on demand. But tune in next month because it's going to be wild to see what happens after this month, and we've got some more to talk about. But it's the M4 signing off for September and the third quarter. See ya.